Hello and welcome to the first episode of this podcast. This podcast is basically geared towards students wishing to pursue a career in investment banking and finance. And when I've done a few episodes, they will be on Spotify. For episode 1, we have a head trader at Amplify in London, Sam North. Now, Amplify are a really good company. They essentially take people from a range of backgrounds and turn them into traders. They have a range of different courses. I think they've even got a summer sort of internship coming up. So I'll put links below so you can check them out. But also, if you like this sort of content, please subscribe because it really does help me out. Enjoy.
Okay, so today we have Sam North. So thanks for joining us, Sam, for the first podcast. So do you want to say what essentially is your job?
Yeah, so I work at Amplify Trading as head of trader development. So traders alike will come and do our course for training. Some will do it to pursue a career in trading. Some will use it as a stepping stone for a career in finance. Some will use it as a career change. But yeah, we train traders up with. We want them to still have discretion for their own trading, but we teach them our way of doing it, combining fundamentals and technicals, and we deliver a few different lectures on our own edges that they can work with, and we work with them to develop that. And then also some traders will do the whole program, and those that finish the end of the course in profit, we back for the foreseeable future. They'll still have targets to make and stuff like that. But yeah, well, my job essentially is to help nurture them through the course and risk manage them along the way.
I must admit, I was looking for your LinkedIn, I think yesterday or the day before, and I seen that you were, when you were younger, you played for Fulham and Reading. So how does someone go from that to a sort of London trader?
Yeah, so back in the day now, quite a few years ago, I used to play football for Fulham's academy up until 16, 15ish, and then to Reading to the under 18s, where I got offered a scholarship. I sort of fell out of love with the game back then, but maybe a bad decision to quit, considering some of the players that were in my team who are doing quite well now. Gylfi Sigurdsson's in the Premiership for Everton on silly money, so he's doing very well. But yeah, I fell out of love with the game and decided to continue my studies and went to University of Portsmouth, studied sports science, but did my dissertation in sports psychology. So there's a lot of skills, I guess, from playing sport, developing my psychology that way, and trading that are interlinked. But I came out of uni and didn't really know what I wanted to do, in truth. But then I actually did the course at Amplify in 2014.
Tried and tested then.
Yeah. I mean, the course was a bit different then to what it is now, but we've developed it and made it. It was great then for me, but we've developed it over the years and made it really good. We're super proud of what we've achieved there. In the last year, of people that have come and done the course, 55% have been profitable in the 4-week period, which is great, considering some of those traders may never have traded before. So yeah, it's been a journey, but a good one.
Well, okay, so let's forget about COVID for a few minutes.
Yeah.
What is your day-to-day role, including what time you wake up, or what's happening?
So for me personally, I'll get up any time between sort of 6:30 and 7. From a point of view of my own trading, I don't really put a trade on until after 8 o'clock, so the London Open. So any time before that is really just having a look over the markets, placing alerts for certain levels that I'm interested in, doing my research, catching up with Anthony. I'm sure some of you who know Amplify Trading would have watched his briefing. So I have the pleasure of watching those live and speaking to him about that and getting all the inside info. So that's what I'll do in the morning. And then 8 o'clock, I'll see if there's any trade opportunities that have appeared. But with the traders that are in, we'll all watch the morning briefing at the same sort of time and have a Zoom call, much like this, after, where we talk over what was discussed in the briefing, any questions that the guys have. So kind of like a strategy building meeting in the morning, and where we talk over, what's coming out for the day ahead, what's coming out of the week ahead, because all these things are important for the products that we're trading. Certain times of the day are going to suit certain traders better and worse, and products are going to be more, in focus at certain times and not as well. So that period in the morning is quite key for us and the traders to give themselves the best chance for the remainder of the session, wherever that may be. And rest of the morning, I mean, it depends for me. If we've got a course, we've actually got a course starting Monday the 1st of March. So that week is an intense one. So there'll be a lecture in the morning and a lecture in the afternoon. And that will be based around building their edges linked in with Amplify's way of teaching. So each day, step by step, builds up together to sort of provide this Amplify trading process that we talk about. So there'll be a lecture every morning next week when the market is quiet. Afternoon, 1 o'clock, we take a break, 12 to 1. When I first started trading, I traded, me and a colleague of mine, we set up a little fund, and we never ever traded between 11 and 1 because people in Europe are on lunch, right? And the markets are quiet. So that was, a period where we had a rest, and rest is important. But yeah, 12 to 1 lunch, come back 1 o'clock, another call, look around the markets, look ahead for the US data. And then as it's next week, we'd have another lecture in the afternoon before wrapping up 3:30, where we look at the calendar for tomorrow, discuss what happened today, reviewed all the trades that they did. So one of the best things I think about learning to trade is getting that instant feedback from mentors who have experience. But that could mean, a good trade that didn't work or a bad trade that did work. Both are equally as important to get that feedback. So we spend a bit of time at the end of each day just reviewing any trades that were taken, whether that be on the sim or the live account.
Okay, the CEO of Goldman Sachs today, he announced that he wants everyone back in the office essentially. So what has been your experience from working from home?
Do you know what? It's way more productive working at home.
Okay.
No travel time, literally roll out of bed and you're there. So you could argue the work-life balance is a lot better. Obviously at the moment we can't do anything, so there's no real balance in that respect.
Yeah, that's true.
The percentage of traders that we've had that have been backed has increased dramatically since we've gone work from home back in March last year, probably for same sort of reasons, in that people don't have to travel to get into the office, everything can be done at home, you've got more time to prepare. But also the trainees, the students, whatever you want to call them, they perhaps feel more comfortable in asking questions. They can do it in a private manner, a one-to-one manner, and they get a lot more out of it that way. I actually, back in March, I didn't think it would go down that route, but it has. And also we had a webinar, actually, I think it was Monday, where I said these same things, and Will DeLucy, the co-founder of the company, was saying also one of the key factors may well have been there's no influence from someone else sitting next to you. Someone shout, "Oh, look, I'm in gold, it's going lower." And then that person here might think, "Oh, I need to be in that trade as well." So there's none of that. But yeah, I like it. I think it would be good to get back into the city. I think younger people need to. I think it's important to have that face time, to conversate with people, social skills, all of that. But I think having the balance is good. Maybe 3 days in, 2 days home, or the other way around, I think would be something that'd be quite good.
Yeah. So you've had nearly 7 years experience in finance. What would you say is the best or the highs and lows of those 7 years?
Of my career?
Yes, yeah.
Highs I get a lot of satisfaction out of seeing people I have worked with go on to do really well. So when I first came back to Amplify, I also do some work in the summer where we have summer interns that come in, and usually they're sort of first, second, third year usually first and second uni students. And so over the years, a lot of them are doing really well now, and it's always great to keep in contact. And every now and again, we get sort of like a LinkedIn message or a text message saying, I've just got this job, and that's great because you're working with these guys, and for them to even reach out again, it shows that you had a bit of an influence on them. So for me, that anytime something like that happens, I'd say that's the high that immediately sticks out. The low, I would say it would have been at the very beginning of my trading career. Actually, I think it's when you get into trading, I didn't really know enough about it. I definitely had beginner's luck. And so it was going quite well, and then sort of hit a wall, stagnated, came back down, and you're not making money. I had no other income at the time when I first started trading. So that was a pretty low point. I think I would always say to anyone looking to get into trading, you want to be in a financially safe position. You either want another income or not have the need to make money straight away, because it's something that does take time. And once you can trade, inverted commas, a lot of it is psychology, 99% psychology. So it's a hard road at the beginning. It's not something that happens overnight. And I think that realization at this time was hard, and it was a low period. But look, it is what it is, and if you don't have those journeys and hurdles to overcome, you don't appreciate them down the line. So you can spin it that way, and so that actually it was one of the best experiences, because then I can relay that onto other people as well and set proper expectations.
Yeah, we've touched very briefly on the psychology. So how do you learn how to sort of get your head out the gutter once you've had a sort of heavy loss?
Yeah, I feel like there's definitely coping mechanisms that you can teach people. I feel I'm very blessed in the way that when I used to play sport, and I don't know if anyone's watching this and has listened or read Michael Owen's autobiography. I'm a bit of a fan of Michael Owen, despite some of his suspect commentary comments. But he's similar to me in that, and certainly when I played sport, if I went through on goal and missed a chance, you've got to be positive about it. And he would spin it around and be like, well, I don't think anyone else would even have got in this position to take this chance, and I know I'm going to take advantage of the next one. And that's really my mentality in all sport. I used to play, football, decent level, as I said, rugby, cricket, athletics, and I'd back myself. If I've done something before, I know I can do it again. And with experience, you only ever get better. So with trading, I last year had 8 losing trades in a row. Didn't even realize I had 8 losing trades in a row, as it goes. So it's only when reviewing it at the end of sort of the quarter at the time. So I think a lot of what helps me is experience, is backing myself. And also with trading, you've got to accept where you're wrong before you've got in. That helps massively for me. If I get into a trade and I say, well, this area here, price goes there, I'm out. That's where I'm wrong. And if that happens, I've already accepted it. And over the course of a few months, keeping a record of your trades or possible trades as well that you might take, you build up that confidence. You accept you're going to lose trades. You get into a trade, you can never be 100% sure where it's going to go. You literally can't. So for me, understanding that you're going to lose trades, you're going to have periods where it doesn't quite go well, it's fine. But the experience shows you're going to take advantage of it as you through longevity.
Yeah. So many people in finance or investment banking or whatever, they don't tend to, they get burnt out easy. What are your sort of career goals in the next 10 to 15 years? What are your targets?
Career goals for me, I want to keep personally growing my own trading account. I also want to, I at the moment, I'm not massively into individual stocks. So growing a individual stock portfolio is something I'm keen to do. For the last, 2014, so sort of 6-7 years ago, nearly 7 years ago in October, I've been in sort of ETFs of equities as a whole, like US equities, and that's obviously gone very well regardless of last year. So I want to keep building my portfolio and my own trading account and individual stocks and stuff like that. That would be a goal and continue to build Amplify. We want to, our reach at the moment is good. People that do the course at the moment come from all over. I mean, starting on Monday, we got someone doing it from Texas part-time, but obviously the time difference wouldn't be ideal. We got people from Singapore, from Malaysia, from Australia, all over. So we want to, keep growing it that way. On the university side, we've worked with over half the unis in the UK. So we want to build that up as well. So these are all plans that, for me personally on the trading side, but also the company would want to, still be here and growing it and keep making strides each year.
Yeah, I remember I went to one of the trading courses in London with Anthony. That was really good. It's talking about trading with Twitter and how
he's
how
the man for that would have been a good session. He knows his stuff. Yeah,
that was really good. It's no secret that basically finance and banking, whatever you sort of sector you want to join, M&A or sort of credit risk, is really sort of competitive. So what would you say is sort of the top tips for someone in maybe the second or first year of university?
Yeah, no, that's a good question. And for me, I would never have got a job in that sector coming out of uni because I didn't study something that was would have got me a job in that, or studied anything at school that would have helped either. So I started trading with no background in finance, politics, economics at all. All my knowledge now has just been developed over the years. However, my brother, who literally just walked past my screen a minute ago, he studied finance and politics at Manchester and did the trading course at Amplify with me as well. And he works in M&A now. He's actually just worked on a deal that went public yesterday, which was great for him and the company he's at. But one thing I would say, that the tips, you want to be doing something practical. You want to have that practical experience before, whether that be boot camps like you did with Anthony, through universities. We work with all the unis, as we said, internships. One thing that really shocked me when I came back to work at Amplify was we do work on people's CVs, was just how competitive it is. Like you said, I mean, some of these CVs were insane. People with all of these different languages, every single half term and summer holiday, winter holiday, Easter holiday, they were doing something for their CV. I was playing football, every single day. I had no time or didn't even think straight about doing that. So you want to be doing something practical. You want to be making the most of it. I think it's incredibly hard at a young age, even in university, to know what you're really going to do in life. But if you can, if you want to go into finance, then get down and do some internships, learn as much as you can. Our internship is great in that for the people that don't really know what they want to do, it explores all the different routes. We've got loads of different simulations. So it might be sales and trading, you love it. M&A, you hate it. Broking, you love it or hate it, whatever. You just got to make the most of the time that you have, and make yourself, as you've got to try and stick out, which isn't easy because, like you said, it's so competitive. And my brother, he was, applying for all of these jobs, and some you never hear back from at all these graduate programs, and that can be soul destroying. But once you get your foot in, once you get your foot in the door, you're laughing, aren't you, for the rest of the time, as long as you don't mess it up too much.
I noticed you said about practical experience. I remember there was Anton Krail. He said that the money you lose in trading is the price that you pay for experience, which I think is quite a nice quote. I think that's sort of...
No, it is, and this comes back to one of the things I said at the beginning, in that you can have good trades that don't work and bad trades that do, but understanding the difference is massively important. And I think that's having a mentor really helps. Many people have helped me along the way to where I am now, and it's just that understanding can speed up that process massively. But with any career as well, it's the same. You need someone to tell you, what you're doing is right or what's the wrong approach, and feedback is massive, and it just speeds everything up. But yeah, absolutely, those little hurdles that you have where you lose trades or you make mistakes, if you don't learn from them, then it's a waste of money. But if you do, it's the best decision.
Yeah, so I'm going to go in a different direction here. So posted on Reddit about a trader coming on and asked us some questions, and some of them were a bit, but I've got one good question from someone called Truth Be Told, saying, how does managing large sums of money affect your view of money?
I'd have to say at the beginning, it didn't sit too easy with me. But what makes it a lot easier is when you're very strict risk management wise. So I would never intraday, medium term, longer term trade with risk more than 2%. So I deal with it in percentages. So when I decide to size up after having a good period or whatever, it's still 2%. Price moving from A to B doesn't matter. It could be £10, it could be £100, it could be £1,000. It's literally what it is. So that's how I look at it. I don't have my P&L on the screen. I do all my analysis before I put in the trade, and my trading style hasn't changed from this year to last year to the year before, and so on. So it's all consistent. And I don't really watch my trades when I'm in them, because that's when you can really get emotionally involved. And that's when you start thinking about the money. Oh, it's at a round number, let me take that off. But through experience, what I've really realized is, when I first started trading, I had a win percentage, which was fantastic, but my P&L wasn't. It was pretty much break even. And I would take winning trades off way too early when I was so, I was just watching every single price movement. It would make me think, oh God, my analysis is wrong now. And I would take it off. So through experience, I realized, well, look, create some rules. If those rules don't happen, leave your trade on, or otherwise you're just doing yourself a massive disservice. So unless there's news coming out, there's game-changing comments, or there's a big correlated move, if I get into a trade, it's either going to hit my stop or hit my target. The monetary value behind that is what it is. It's 2%. To make hopefully 4% or 5% or 6% on a trade if it's 2 to 1 or 3 to 1. So at the beginning it's hard, but once you've got experience and the stats to back up that your edge is correct, then it makes it a lot easier.
Okay. Sticking with Reddit now, I wasn't going to mention this sort of the GameStop topic, but two reasons. One, because it's great clickbait, and two, because it's actually happening right now. Again, it's the same thing. And I've weirdly, the time is perfect. The market's just opened up. So it's currently at 160. So what's your view on the GameStop?
Do you know what? I found that the first time it all happened, I found it fascinating. I found it absolutely fascinating. But I knew if I got involved, I would lose money on it. It's not my style of trading. I think one of the most important things is understanding one style. I'm happy to sit in a trade for a while and be patient to wait for it to come to me. These are fast money moves. Is there much reason behind it? Maybe not. I think I actually tweeted this yesterday, funnily enough, before GameStop went up like it did 100% or whatever, that usually the people that talk in the loudest, they haven't just got in these markets, they've been in before. So the moves that happen on individual days, they're absolutely laughing because the percentage increases are just getting bigger and bigger and bigger. The problem is that influences people to then get in, say, right now. And a move that was 100% yesterday, if it goes up a tiny bit today, it's still big for those people that got in yesterday, but today it's so small. So look, fair play to the people that have made a lot of money on it, but on the day it came crashing down, I had a lot of calls from people I haven't spoke to in years that know I'm in trading, and that they went to school with me and they're like, what do I do? Is it going to go back up? And the truth is, I have no idea. If they're in money that they can afford to lose, then I would say just hold it. Could it go up? Of course it could. Could it go down? Yeah, most likely it probably will. But if people are listening and they're in, hopefully it goes to the moon for you.
It's interesting about your school friends who probably, I'd imagine or assume, that aren't really in trading. They were in GameStop, and I was watching a interview by Jordan Belfort from Sky, who said, when the last group of people tell you about it, that's when you should sell. Which I think,
that's when it's a top in the market, isn't it? And look, I mean, old me would have absolutely got in on GameStop and AMC, and it might have worked for a bit, but how do you know where the top is, when to take it off? And then it starts coming against you and you go down 20, 30, 40%, and you think, oh, whatever, you ride it back down to zero almost. But it's a fascinating topic. It really is. And look, I'm more than happy to take a punt on things every now and again. If someone gives me a stock tip, listen, sign me up. But I would never ever recommend doing it more than you're happy to lose. I have a bet on the football every weekend, 20 quid here, 20 quid there. I generally don't think I'm ever going to win, but that's fine. I'm happy to do that for the entertainment side of it. But when it comes to trading, investing, you should never risk more than you can afford to lose. And I think, unfortunately, some people would have done that before, but it lessons again, isn't it?
Yeah, okay, let's go for another sort of hype area at the moment. Crypto. Are you a fan or not?
You know what? I don't know enough about it, and that's the truth. Do I want to know more yet? Do I think it's something I need to know? Probably. So I'm interested. When we came down 20% in a day or 2 days, a couple of days ago, I was thinking, you know what? Let's get us down to 20,000 in Bitcoin, and I'll have a bit of that. I speak to people. I know a lot of people that are really knowledgeable in it, and some of them are a bit worried about the after the Elon Musk stuff, that there's going to be some serious regulations coming in soon, and there's going to be a correction and whatnot. But at the same time, there's a lot of these coins, tokens, or whatever you want to call them, that are probably going to be the Amazons and the Apples in 20, 30 years. So, it's a game-changing thing, a game-changing space that I want to have a bit of it for sure, but not until I understand it enough. So I'll put a bit of time aside to look into it more.
We've got a few more questions. The next question is: if you were given £10,000 now, what are you doing with it? Where are you putting it?
£10,000. I would, if I were to invest in something.
Whatever you want.
£10,000 to well, I would probably 10,000. I think it'd be worthwhile. What I would do, I'd look into a few crypto projects with that. I would. I think that'd be worthwhile. I'd want to have a diversified portfolio. I'd like to have a few, say, almost looking at about 20 products. 15 of those maybe more stable than others. 5, a couple of YOLO ones where it's either going to absolutely fly or go nowhere. But yeah, that's probably what I would do. I'll tell you what I wouldn't be doing, and that's spending that money on a season ticket at Arsenal at the moment.
Yeah, not doing too well at the moment. Okay, so every year you do a Amplify quiz, don't you, on your YouTube channel?
Yeah.
So what I want to do is test your knowledge by going back to 2009 and asking you the same questions that you were asked then, or you asked then. Are you up for that?
Yeah, I'm not too confident, but bring it on. Bring it on.
Okay, let's try this. Share my screen. Okay, can you see my screen?
I can, yes.
Okay, so the first question: which of the following has had the best relative performance year to date in 2009? Remember, so this crude oil, palladium, S&P 500, or soybeans?
Do you know what? I think it's palladium.
Should we find out? It was palladium, yes.
Yes.
Right, so it's 1 for 1. Now, there's only 5 of these, so right. Next one: which of these markets did not make a multi-high year in 2019? Was it crude oil, treasury notes, euro stocks, or gold?
Oh la la. Euro stocks.
Euro stocks, or it's crude oil. 1 for 2. And question number 3: which statement from the below is not true for 2019? Theresa May announced resignation in May. S&P didn't close below its 200 daily moving average. Marco Draghi's last day in office was October 31st, or the curve below the 2 and 10 year notes inverted for the first time since 2017. Sorry.
It's either going to be the S&P didn't close below the 200-day moving average, or the curve between the 2 and 10s. I am going to go for the S&P didn't close below its 200-day.
Find out. Yes, that's right. Yep.
Lovely.
2 for 3. The European elections took place in what month? Was it May, April, March, or June?
June.
Oh, it's May.
Oh, May.
2 for 4. Let's see if you can get 60%.
Yeah.
Q3 began with a Category 5 hurricane. What was it called? Was it Michael, Katrina, Dorian, or Irma?
Oh.
But
It's funny. I can remember all of these.
they're usually in alphabetical order, aren't they?
Yeah.
Hurricane.
You know, for me, I'm thinking Dorian or Katrina. I'm going for Dorian.
Yes.
Yes.
Yeah. That's
the 2-1.
Yeah. You're done. There we go. Right. So that's the end of this episode podcast. So thank you very much, Sam North, for that.